All right, hello everybody. Welcome in. This is Gerardo G Money Pius, and welcome to this video series. G Money Trading Hindsight is 2020, and the purpose of this series is to review, reflect, and refine by analyzing what happened in the market, what we could have done, and what we should have done if we didn't get it right. And obviously we got it right. Going back and reflect on that as well. There's going to be two types of episodes. One is simply, hey, I missed it, learn from those missed trades, and two, we got it right. This episode is actually a mix of two things because we were right, but also we started off wrong, and then we ended up wrong again towards the second part, towards the third attempt. But I'll do the best I can here to review, right? And the phrase "hindsight is 2020" means that it's easy to see things clearly after they already happened, right? In other words, once a trade is over, we realize, hey, we should have done this, even though it wasn't obvious at the time. 2020 refers to perfect vision. Hindsight means looking back to the past. So basically, looking back, it's easy to make the right decisions and learn from them, and try to master these outcomes. So this is a live chart right now that I have in front of me for gold, and it's sold, right? The very first thing that I like to kind of grade myself in is was I in the right direction during the New York session? And at the very beginning, right, my intention was to sell. Okay, my intention was to sell, but I thought we were going to go a little bit higher. But just to kind of quickly check the sessions, today, this box here represents the New York session. And the biggest move was a sell from high to low during the NYSE market. Now, granted, when price got to this level, 32.60, we did get a pretty strong pullback, which is about 50% of that $73 or $731 pip drop. Okay, so the sell was the move to take to wrap up the day. A nice little counter trade could have been taken to capitalize on some good movement back up and end up closing the day. But let's review exactly what happened top down and see what we can learn from. So for starters, right, I actually wanted to sell. That was my initial idea, to sell, but I got stuck on this bias before the New York market opened, that we were going to climb to this 15-minute, 1 hour drop area. Okay, the drop base drop is a selling pattern that I like to trade, and I wanted price to come back to the equilibrium up here. Price actually did get stopped from this 1 hour, 5 minute drop base drop as well. And, that was an opportunity to take us down. But because I thought we were climb up first and then sell, I kind of got stuck trying to buy during these zones. There was some news in there in the mix of things, but I did get stuck trying to buy in these zones. We did end up selling a good chunk of this back down, which kind of made my loss into a break even. But just having these 2 minute areas there did kind of just made me, did not let me see the sell much sooner. Okay, did not let me see the sell much sooner than what I wanted to. So here we are. Okay, these 2 minute rally-based rallies are here, and obviously, right, we have the structure momentum timing indicator that kind of gives us a clue of what should be doing during the NYSE. Okay, and if I go back to the 5 minute chart, I mean it was clear as day, as they like to say, right? The impulse from here, the pullback, it touched about 50%. The boxes, they weren't fully aligned yet to be bearish, right? But I actually was kind of waiting for this trend line to get broken on the medium box, a break and retest, and that happened. And again, right, I did not see this because of these 2 minute sections that I was completely, married to, I guess you could say. And I couldn't change my bias quick enough to, all right, guys, let's look for that sell. So we had the little shift that we wanted to right here. And then from there, as price was getting to the zones, I was still kind of looking for the buy there. end there and like, all right, this is my last resort type of thing. But again, though, this thing was ready to drop down. Okay, ready to drop down. We could have sold from right here, the break and retest of this 2 minute mark. And what's our targets? Well, our targets are basically simply, we can measure the entire 204 box from the 5 minute, the full structure swing, and take it down to these extensions. This is also a 1 hour rally-based rally that a student of ours pointed out. And at the same time, it was a midpoint of the 1 hour chart from the bigger box at that scale. That was the move we should have taken right here. Okay. And I took it a little bit late. Some students saw the sell earlier and they were on the sell. I actually started taking the sells from right here. Okay. From where price is at now. And I was able to capitalize and break even right there. Okay. Our next mistake that I did, right, is I was thinking of continuing the sell from here back down to this area. But price did sell a lot already. We were also in this 1 hour rally-based rally combined with the midpoint. As you all see right here, this midpoint section, that we could have gotten some stronger resistance, and price wouldn't, easily trend anymore, right? And we got a stronger pullback back to those areas. And we got caught a little bit of drawdown back there. There's another selling opportunity from here, which could have been good. But again, though, right? This is why these videos are created, to see and back test what happened. So long story short, for me, right, is the NYSC markup um, was ignored slightly, simply because of the bias that I had on these 2 minutes zones, and I wanted to sell from a higher zone. So a lot of times, right, as we always say, right, the moment, regardless of the technicals that's in front of us, momentum can control the day, and momentum today definitely did control it. So let me give us a clean, what would we have done scenario to really catch this move as clean as possible. So let me go to a different chart, erase these drawings, and let's take us back up to where's it at? I believe right here. Yep, right here today at 7:30 in the morning Central Time. Right there. Okay. Well, structure, momentum, and timing. All right. Well, the structure here was bearish, as you see here, high to low. This was the impulse. This was the pullback. The ideal entries were there, but again, though, it's fine. Catch the move a little bit later if we draw a fib on this section right here, like this. Okay. So anything below 23% would have been a great entry. Maybe stop loss at the 38% because we're trading with momentum, and take profit at the negative 272 extension. This right here would have been the trade to seal the day, get our pips quickly. Let's go and enjoy the day. The stop loss for this is a $13 stop loss. Excuse me, $14 stop loss, 140 pips, but the take profit was $48 drop, which is 480 pips. That would have been a great trade still to take, regardless of the stop loss size. Right now, gold is moving massively, so it's very hard to get those little 20 pip stop losses. But again, though, momentum was there. The momentum has shifted slightly right here as well. If we rewind here, right, the medium box, right, is kind of my guide to tell me if it's ready or not, and we were still trending right there. Okay, the moment we got more price action and we actually broke that trend line, okay, we had a retest to it. Up here could have been a great entry as well, okay, from up here, and maybe the stop loss at the high of the blue box with the same take profit. All right, as something like this. That would have been, the first scenario. But with the momentum scenario, the buy low scenario, this is the momentum scenario. And there it goes. Okay. That should have been it. This is our first episode from Hindsight is 2020. Hopefully you guys enjoy, and we'll see you guys in the next one.